going to show you guys how I mark my liquidity and trade zones.
Liquidity areas are areas where large orders are resting. They can be found in equal highs, equal lows. You can find them in trend lines, and they can also be found in Fibonacci levels. Okay, now for example, if I draw a trend line here, okay, connect this swing low with this one. Okay, I also connect it with this. These levels in the chart connected very well. And what did you see next? This very point, let me use the cursor to show you. This very point, you could see that the price broke the trend line. Okay, it broke the trend line at this level. Let me quickly zoom it. So the price broke the trend line at this point and still continued moving up. Okay, and it still continued moving up. That is liquidity. So it actually grabbed liquidity. Normally, if we look at this price, we expected that the price, okay, touched the low at this point, pushed up, came down to touch the trend line again, pushed up, down, up, up to this point, came down to respect the trend line. And what do you see next? It pushed up again. Now at this point, this very point, okay, this very level, or liquidity has been created at this level. Okay, so now what do you see next? This is equal high. Okay, so the price pushed up, created a higher high, came down, created a higher low, pushed up again, created a higher, but it created a high, sorry, but the high was not higher than the previous high, so we'll call it equal high. So at this point, you see a lot of orders, resting in this place. We call this order liquidity. Money is resting in this place. A lot of dollars resting here. So now the price broke the trend line, swept liquidity at this point again. Normally, once they see that price comes to the trend line, they will place orders to buy, because normally they see that this is an uptrend, so they place orders here to buy. But immediately, what do you see? Price came down, broke this key level, swept all the liquidity, grabbed all their stop loss, and still pushed up again. So immediately, so what do you see here? As the price is pushing up, remember I told you that liquidity rests in equal highs and equal lows. So this is an equal high. So the price also swept liquidity here again. So normally price movement, right, is liquidity. Price targets liquidity areas. Okay, price moves by targeting liquidity areas. Okay, so that's that. Then also I want to show you guys, remember I told you that you can also liquidity can also be swept in Fibonacci levels. Like I said, liquidity can be swept in Fibonacci levels. So price is on a downtrend. How do you know it's on a downtrend? Like if I use my cursor, you can see the price was let's say price started here, okay, and then it broke this level and push down. So price is currently making lower lows, lower highs, lower lows, lower highs, lower lows. Right, starting from here, looking at this point very well. Okay, let's start from here. Let's assume that I want to use my Fibonacci 2, all right, to trade on this, okay, on the 15 minutes time frame. So what I'll do is I'm just going to bring out my Fibonacci 2. Okay, so my Fibonacci 2, right? I'm going to, let's say I want to trade at this point. Okay, now I know that I'm going to connect my 100% level there. All right, so then I'm going to connect my 0% level here. Okay, I'm going to connect my 0% level. Then I'm going to ignore the other levels. I'm only using between 0 to 100% swings. All right, so when looking at it, you are going to find that as the price was moving, let's assume that the price has not gotten to this level. Okay, so after connecting my my lower high and then my lower low, okay, I waited for price to start pushing down to actually retrace. So the price retraced, broke, swept or passed through the 20.6 level, also continued. Okay, so it passed through this level when 20% Fibonacci level. It could not bounce from there. It passed the 38.2 level, and then it swept through the 50% level and even the 61.8 level. Now the 50% level and the 61.8% level is where a lot of people do wait to take their trades. A lot of orders are clustered between the 50% level and 61%, 61.8% level. Remember, this is the 61.8 and 50% Fibonacci level are the golden zones, the golden zones, right, where a lot of people want to take trade. Now, if you actually look at what happened here, you see that the price immediately after touching the 50% zone at this point, the price it pushed up to the 50% level and then pushed down and then broke the 50% level, went to the 61.8% level, and then pushed down again to tell you that there is a reaction in the 61% level, telling you that there are a lot of orders. You have a lot of sellers there that wants to push the price down. Okay, so and then afterwards the price went again and swept all the orders at that 61.8% level. Okay, so you can see that price is actually targeting liquidity, actually targeting levels where buyers and sellers are clustered or are resting. So it broke through totally, it entirely broke through the 61.8 level. And what do you see next? Price began to move down aggressively. Move down. Okay, remember I told you that liquidity rests in swing highs and swing lows. Okay, so you also have a lot of buyers at this point. Okay, remember that it was the buyers that pushed the price up. Okay, so liquidity was swept in this 1% level, and then price started moving down. So the price also finally swept this liquidity and went and kept going down. Okay, so you don't just enter trades blindly. You wait for liquidity to be swept. So remember, liquidity was swept in 50% level, 1% level, and then it started going down. You wait for confirmation before you enter your trades. Okay, I want to quickly go back to this place I marked just now. I want to say something very important. So this is very important. After marking your point, which you can call the point of interest or area of value. After marking it, for example, this demand zone was marked. I marked the demand zone. Yeah, I marked the demand zone. Okay, I marked this demand zone. Yeah, so demand zone was marked. So after marking your demand zone, wait for price to come back to this level. So immediately the price is coming to approach this very key level. You go to a lower time frame. Go to a lower time frame. For example, you can go to the 15 minutes time frame. You can go to the 15 minutes time frame. Okay, so when you go to the 15 minutes time frame, you can see look at what happened. The price actually came back to the level and gave us an opportunity to actually buy from this market. So if I'm to trade now, you wait. So price actually came back to the level. So what I'll do, I'll place an order here. I'll place a buy order at this very candle. Place a buy order. Place a buy order. Put my stop loss at this low, and then I'll place my take profit. I'll target risk 1 to 3. So if I'm risking, let's say 300 points, right, I can target like 600 or maybe 900 points. 900 and something, 900 points should be a risk 1 to 3. All right, so let's see what happens. So the price actually pushed up. Price pushed up from here, started going, giving me a lot of profits, then kept going, right? Kept going, and then it hits my take profit. It hits my take profit around this level. It might take profit around this level, and that's a very good trade. So this is very important. When you've marked your zones, you wait for price to come back. Patience is the key here. You don't just trade because price is just going up. You don't just buy because price is going up or sell because price is going down. You first of all mark your key levels key demand zone, key supply zones, support levels, resistance levels. Right, after marking those levels, you wait for price to come back. So when price comes back, go to the lower time frame, like the 15 minutes time frame, from the 4 hour to the 15 minutes time frame. Then look for candle confirmation. So when you see such candle confirmations, you take your order. It's that simple. Now, I hope you've gotten values from this video. If you've gotten any value from this video, I'd like for you to subscribe and share, so that when I make videos like this, you'll be the first to know. Thanks.